Hey everyone, today I'm sitting down with Jim Colombo. Jim has been investing in multifamily properties in Orange County for a little over 20 years. And I'm just grateful that you're sitting down, getting together with us on the couch. Jim, in my opinion, is one of the best operators of apartments in the game. So Jim, thanks for being here.
Well, thanks for having me. I'm happy to be here.
Absolutely. So let's dive in. If you would, just share a little bit about yourself, how you got started.
Well, I got started in the mid-90s, actually. After the recession in 93, 94, I spent about 2 years kind of researching. It was something I was always curious about doing. I was an engineer. I worked in the office. So it was just a different environment completely, in the sense that there was no internet. You could not, everything was by newspaper. And I would literally started by reading the Sunday paper ads. And I'd make calls on Sunday in hopes that I would be first in line on Monday morning. But every once in a while, they'd call me back on Sunday. And it was a great opportunity to go out and look at properties and to understand them. And I would drag my wife with me, and she'd say, "Why do you want this? It's just in a terrible neighborhood." And I'd say, "Well, think about what you could do with it and what we can make." So I came from an entrepreneurial background, but I worked in corporate. So, as far as entrepreneurial with my family, had a lot of entrepreneurs, and so I grew up in that environment. So I was comfortable with that, even though I was in the corporate world at the time. But I was always intrigued by the opportunities that especially apartments could provide to you and your family in the long game. The long game meaning that these were products that people had to have a place to live. And I always felt that if we could provide a value that was maybe a little better than the neighbor or across the street or within the area, that down the road that would be a great investment. And it was really relatively a conservative goal. It was not to build a large portfolio. It was just sort of an add-on to our corporate benefits and all the things that we had at the time. And so the very first property we purchased was 4 units in the city of Anaheim, and it was in an absolutely terrible neighborhood. I got there, we got the property. It was in January of '96. Went there to introduce myself, and of course, one of them's already moving as we're coming to introducing ourselves as the new owners. But we went through it. We learned a lot, made a lot of mistakes in the early days. Questioned, why am I doing this? We'd go there on Saturdays while working around the property. Yet the tenants are kind of relaxing, watching the game, having a beer, or what have you, right? So it was an interesting time. But I just felt that there was an opportunity, if given it time, given effort, and continually learn the business. And like I said, it really was just sort of a side hustle, as people say today. It was not something that I looked to really build into a full-time business. But as I got my sea legs and understood how to run it and became more confident, I asked a lot of owners. I'd find the numbers of the neighbors, because there was nobody around there. Like I said again, there was no internet. There were not a lot of resources other than books to read, and so maybe talking to an agent here or there, but there was not as much information as there is today, and it was very regional. The information that you did have was very regional. There was not a lot of national information, county-wide. It was very regional, cities, neighborhoods. And so you learned sort of kind of in the dark a little bit. You're kind of feeling a way around, talking to neighbors, talking to other tenants, and getting vendors that way too. Sometimes, it was not, and there was the yellow pages. That's what it was back then. So about 2 years into it, a little less than 2 years, we purchased a second property, and then before that 2-year anniversary, I bought a third one. So within 24 months, we had bought 3 fourplexes.
All in Anaheim, or?
2 of them were in Anaheim and one was in Tustin.
Ah.
Funny little story about the one in Tustin. We lived up in North Tustin, and this was an ad that I called on a Sunday morning. I said, this is just down the street from us. It was a little cul-de-sac of fourplexes, and they were all mid-century. And
Perfect.
at a time, they were probably really very attractive at the time. But it was, you know, they were worn and tired looking and so forth. But it was an elderly couple that were selling the property. And the agent called me that morning. I said, I'm going to come down and take a look at it. It was 10 o'clock on a Sunday morning. Took my wife down. The two of us went to look at this. And she goes, this neighborhood is junky. It's like, why do you want this? I said, oh, I think it's a great opportunity. I said, you got this extra parking down here. You've got these driveways, all this large yard. I said, families would like this, you know. They were all 2 bedrooms, townhome style with backyards. And it was on a little cul-de-sac. And this couple was another couple. They were selling it, and they were offering a 80-10-10 financing. So we would finance 80%, we would put down 10%, and they would carry 10% for 5 years. And when I was there, I said, what about the property next to you? It was a mirrored property, and it shared a driveway. And she goes, oh yeah, so-and-so, he's been a long time too. I'll talk to him if you want. I'll talk to him about maybe you want to buy that one. So within 90 days, we had bought our 4th property, which is the one next door.
Wow.
Under the same terms. So these were some of the opportunities back in the day when the market was a little tougher in the sense for financing, and being that they were fourplexes, that they were on, you know, residential financing, you could do this type of financing. And that's what we did. So now we had 4 of these, and after I had 4 of them, we were on vacation 6 months or so afterwards, and I told my wife, I said, you know, I'm running some numbers here. I said, you know, we could probably work our way into this full time. And what do you think? And she thought I had 2 heads. I was like, are you crazy? I'm not going to give up my career. I said, really? Well, you complain all the time about going to the office. I complain. Let's try to do something else, you know. So she had some time off, and I said, why don't you go, we need a few things on the property. Do you mind taking care of it? Yeah, no problem. She put a spreadsheet together and went out there with the handyman. She goes, this is kind of fun. You know, it's like just a relatively simpler, less complicated. But of course, over time, it's more complicated. But at the time, it was nice to be out and have some management of your time and things. So there was some attractiveness to that. And over the next couple of years, we both worked our ways out of our corporate job. We had 40 units when I finally left in February of 2002.
Wow.
And we also started managing for a few people at the same time. And we had built in that location in Tustin, we had actually bought 5 fourplexes. We got the city to put in fences for us, repave the streets, we got street sweeping.
Wow.
We got a whole bunch of things. The cities had grants and stuff. So, you know, a lot of times you just ask, and there's interesting where there's money available sometimes. Cities have redevelopment money. And then we went around and queried with some of the other owners and said, hey, you know, you can do this, you know, maybe you can get your building repainted. They even provided some painting as well on the buildings, or a portion of that. So it was an interesting deal. And that's where we grew at that point. So we had those 6 fourplexes, and then we had, or 7 fourplexes, and we had a 10 unit that we bought. And that was, the 10 unit was the first one I bought in Santa Ana. And
McClay?
that was on Washington. It was 10 units. I think it was built in the late 40s, actually.
Oh, wow.
It was pretty old at the time. But kind of a cute property, and you know, it was all 1 bedrooms. And everything else we had were 2 bedrooms. I was always like, well, you get a little better yield because you still have a kitchen and a bathroom, whether you have a 1 bedroom or a 2 bedroom. Might as well go a little higher rent if you can. So anyway, so we went through that, and then we started buying more properties in the city of Santa Ana primarily, and also Anaheim. We had properties in Placentia. First property we bought in Costa Mesa was in 2002 also. And But at the time, I started expanding more, and we built about 275 units within the city of Santa Ana at the time. And we were primarily all there through the Great Recession, essentially. We were probably, back up, we were probably about 150 units prior to the Great Recession. And during that recession, and just after that, 2009, 2010, when we met, we expanded about 275 units. And the recession was good for us, and because there were opportunities available. There were operators that maybe were semi-retired, or things were changing, the market was changing, the tenant base was changing in the sense of there's more competition, and they didn't want to make the investment, so they kept their rents low. And so I think from them, some people decided as they were deciding to retire, there was benefits for those that want to go in and improve the properties, and and so that's what we did. We took advantage of that, and all those, like I said, in the time, most of those were in the city of Santa Ana. We did have some stuff, also some properties in Orange as well. But as we grew, we had to grow the business as well, and that's where it, when you scale, the things that you could sort of keep at the top of your head or on a pad of paper doesn't cut it anymore, right? So you have to become more sophisticated. You have to invest in software and more sophisticated vendors, and we just built that. We had an assistant at the time, and that's how we grew up until into about 2020 or 2019. We saw things changing again, and instead of chasing yield on some of the bread and butter neighborhoods, it was time to move to better product. And so in 2019, we actively pursued converting the entire portfolio
out of Santa Ana.
Out of Santa Ana, we went from about 274 units in Santa Ana to we're at 160 now. The top revenue is more than it was then, even if we take the numbers back to a couple years prior, but it's better quality. Wasn't chasing the same yield, but it really was almost a lifestyle change as well.
Moving out of Santa Ana, you did it right before rent control hit.
Yeah.
And then timing worked out well there. And then you 1031 into, now all your units are in Orange, the city of Orange, and in Costa Mesa.
Correct. We're in two cities. And there's a lot of advantage if you stay within a couple of particular cities. You kind of learn their, every city has code enforcement, they have certain rules, even things down to basics, such as who's the trash provider. All of these things help you manage in a more productive manner, in a sense. So if you can identify an area that you like, for us it worked. It allowed us to take it from really a full-time, we were working full-time prior to this, to now we're sort of in a semi-part-time. We're still engaged in it, during the week and maybe a few days on the weekend, but it's not a full-time. It's not an 8-hour, 10-hour day. It's about a 20-hour work week for us now. And so it's manageable, but it's also interesting, So we can now also spend time on things that are much more, that are interesting to do, providing better community in a sense. So, one of the things that I've always said, is, one of the easy things you can do when you're operating the exterior, that's your advertisement, because those are the same photos that are going to go out on Zillow, on Hot Pads, or wherever they go. That's the first impression. Somebody drives by on the street, you might have a sign with a number or your website, that's where it is. If you don't have a nice yard, and some operators, they don't want to spend the money. And I said, they'll call me, who's doing this? Or you're doing tree removal, or they're asking who's your landscaper. They say, he's too much. I says, yeah, but you're calling me because you're not happy with what you've got. And tenants do appreciate it, believe it or not. They don't think they do. But it really does.
Mm-hmm.
People want to feel good when their family or friends come over. It's the same thing inside the product. In the early days, I was in the same habit as many operators were, looking for the cheaper materials, buying the cheapest guy to do it. But I found that it just doesn't last, and it's better to find good vendors, and vendors that work in this space, in the multifamily space. They can provide you with a lot of knowledge and products and at a better price and and a better quality, and that specialize. For instance, we use somebody who just does tubs and showers.
Mm-hmm.
You use somebody that just does flooring. Someone that just does countertops. It's a lot of times, I got my guy or my handyman guy, he'll do all these things, but does he get all the little finishes and all the little details? Does he have all the tools? Do they know all the tricks of the trade and so forth? So it pays off in the long run. And what I realized, I adopted a new concept of, a one and done. I only want to do it once in my lifetime. If I'm going to put flooring in, I only want to put it one time in my lifetime. I want to put a roof on once in my lifetime.
Mm-hmm.
If I'm going to replace the shower walls and the tile or whatever, I want to do it one time, so that then I can get the true benefit from that investment. The advantage of having a low-cost item, wears off when you have to replace it again in a short period of time. And it just provides a sense not only for you that your investment is better and that you're not having to readdress that cost again down the road, but also your residents do recognize, and sometimes you have to point that out to them, that we're putting quality in and that we expect them to maintain it. And that's the other thing and when you're operating a property, you want to be engaged with those residents. It's real easy to be hands-off, and a lot of owners, look at it as just a passive income, and it is not a passive income. It is, at the very least, a semi-passive income. But I believe the more you are involved in it, the better the returns, the better satisfaction you'll get out of this investment. And that gets down to all the way down to on-site managers. One of the things that I did differently from a lot of my peers in this, we had products that were 8 units, 10 units, 12 units. We always had an on-site. Even though we didn't have to have one because it was less than 16 units, we had one. And they're your eyes and ears in so many ways. It keeps people from sneaking other residents in that shouldn't be there. It maintains the quality of look of the place. They're able to check the quality of the work. You're sending a vendor in, did that plumber finish it properly? Maybe there's some wall repair that needs to be done. There are lots of things that you need those eyes and ears. Is there a problem with an appliance? Can you have that on site? If you don't have the time to go down or want to check it, have them send you pictures. See what it is. There's so many things that you can do with an on-site that pay benefit. Well beyond the cost of just of what the cost is for that discount or whatever you're giving them or income, depending on the size of the unit.
How do you pick your on-sites?
It's an art. It really is. One of the areas that I found, there's usually somebody that's in the trades, usually, at every property. But another area is that people that work in the restaurant business. They're able to multitask. They're not afraid to get their hands dirty. And it's more important that they know how to communicate also with the tenants. So the restaurant business is always a good source for that because they're dealing with public anyway, and I found that was good. They could get that sweet spot of, being firm, but also being approachable. And you have to teach them. You have to spend time with them. You have to go out to the property, sit with them, walk through the properties for a while until they get, it takes about a year or two for them to really get the hang of it. And also teach them about all the idiosyncrasies of the property. Every property has idiosyncrasies. Properties have problems with drainage. Well, when it rains, you got to make sure the waters move from here. Or, the trees, the leaves fall into the rain gutters. Or, for what, every property has some idiosyncrasy, and that even on the way they're built as far as utilities. Some are master gas, some are separate gas, some are master electric, some are individual electric, things like that. So, there's lots of little things, is there a parking situation? Lots of little things that need to be managed. They're not a full-time job, but somebody just eyes and ears. If you can do that, it also sends a message to the other residents that somebody's here.
Mm-hmm.
Not only just watching what's going on, but is also there to assist them if they get into a situation. Sometimes you get in a situation where a tenant doesn't want to call the owner or the manager and they want to fix it themselves because they're worried you're going to raise the rent or something like that. And it's trying to communicate to them that while we are going to hold you accountable that you are taking care of the property, but we also understand that things wear out, and we also want it repaired correctly. So that on-site manager can convey a lot of that, especially if you're in communities that English isn't their first language. So that's helpful as well.
Do you have the on-site to where they do repair work as well to the interiors?
The majority of them we do, yes. Not 100%. We do, and we have a list of responsibilities that are required by the on-site manager, but that we do tailor them all individually based on the skill sets of the on-site manager.
I see.
So you have to be willing to kind of go through those things too. Not one size fits all. And we get them training. We send them to the apartment association classes. There's quite a bit of training things that you can teach them. But we're also realistic. You have to be realistic. You cannot have them tear open the wall and replumb it.
Yeah, it goes back to your point, hiring the...
Right, you want to hire an experienced and insured and contractor for those things.
But do the on-sites, can they paint? Is that
on-sites can paint, and sometimes they can't always, depends on the condition of it. But one of the very first things I always said was, especially when you're in a bread and butter day where you have graffiti,
right?
One of the first things, get the paint color that matches your exterior. Have them ready for them. Then if there's something, tell them they need to paint that within 24 hours and cover it. Don't just get any old paint. That's the easiest thing you could have them do. Mm-hmm. But many of them they'll replace the faucet, minor plumbing.
Leaks, minor stuff.
Minor stuff. A drain underneath, they hit something under a sink, they'll reassemble the pipes, replace a garbage disposal, things like that. A lot of times there's just some small little drywall repair that needs to be repaired, and that's if there's a plumbing work or electrical work that has to be done, you want to find somebody that can at least repair drywall that's acceptable. But not everybody's going to be able to texture and do all the steps, and you try to come up with a way to somewhere in the middle. Mm-hmm. Train them a little bit more, maybe have somebody else if it's on a more challenging job.
Different investors that I come in contact with, there's like two different camps. There's one camp that's like, I love on-site, I want to buy an asset large enough to support an on-site. And then some folks want to buy under 16 units, mm-hmm. so they can stay below the radar of having an on-site. It seems like there's just a lot of folks that just don't even want to have to, they want to avoid it.
Right, it depends on the personality of the investor. And I was in the camp where I wanted them over 16, but I was already even at 12 having on-site managers. I found there's just so much value in it, and they're not perfect, and you can't expect perfection. You also need to make sure you inspect the units, at least once a year. Go through, and it's a hassle. It actually is a hassle. There's a lot of things I'd rather do than have to walk through.
275 units.
Yeah, or whatever. We started every month. We were doing one building, and we started splitting them. We'll do the south side this month. The next month we'll do the. Also it keeps the load level, and so there is a lot of benefit. And if you can find I always recommend an on-site manager, even if they're not perfect or they're limited. Maybe they're a little afraid of doing some electrical work. That's okay, But what's funny, I found they get a lot of satisfaction when they're able to repair something, and training's important, definitely.
Well, that's a good point. I mean, you always had eyes and ears on site, even with like 4 or 8 units, side-by-side fourplexes. So going back to that, when you had those 6 or 7 fourplexes to where you really started scaling in Santa Ana, how did you end up making that transition? Did you start 1031 exchanging your way up?
1031 exchanging, yeah. The first ones, the first, second, and third properties was cash that we had. We were incorporated at the time. We were able to direct bonuses and money that we had, and we did. Even I think at one time I got a HELOC on my house and bought one that way. So in the early days it was whatever way we could capture the product at the time. But as we got to that 5 and 2, those first 5 properties, really there was very little investment out of our pocket after that. No. We were able to 1031 exchange, and either it was income that came from the properties that we accumulated, or we exchanged product.
When did you know it was the right time? What was the most optimal time to exchange? Like, when did you know you were okay? It's time. Was it just because you were out of cash and kept wanting to grow, or was it the up leg that you found, or did you feel it within?
It was a feel. It really was a feel. At one time, when I had 5 fourplexes and I had 2 others, and I was like, well, that's all. I'm good. I'm not going to do anymore. And all of a sudden, I'm curious. I like to look at product, and I realized, there's other opportunity out there. Let's take it to that next level. And I'm glad I did. It's always a little painful. It's a little bit stressful. Am I going to replace this income right away? You have to keep your eyes down the road, certainly.
Were you selling, going back, when you sold some of these, do you remember, were you closing escrow and then finding the up leg, or did you
We would find them and then sell.
Do it?
Yeah.
And put them under contract?
We'd put them under contract, yeah. So at the time, in the early days, we could find a product, get the escrow, and then put ours on the market and sell it in time. And a lot of those, because they were entry-level products for somebody else, they weren't selling something other product, right? So as we moved from that first level down here, say, those are all entry level. So as I moved up, we were able to take it to that. That second level was probably one of the simplest in that way, because your buyer, the one you're selling, is probably not going to sell something to go into
right.
that. Or they've already sold something. Maybe they had a vacation home they sold, or they're investing, they've got a HELOC, or they've refinanced their home and they've got some cash, or they've had an inheritance, or some infusion of cash. That generally, that first layer of investors, they're entry-level investors.
Right.
So as we got further on, the competition was a little bit tougher, a little more sophisticated. Now we were competing against more sophisticated buyers. And those times the money would have to go hard, usually, to convince them. Or if we didn't close in a certain amount of time, there was a kicker on their part. $25,000 kicker if we go another 30 days. Things that, those are risks, and those are business risks you have to take, but I was confident we could do it, and we did. We've never had to pay any sort of penalty for an extension. So you definitely, if you're going to be looking, have your product property that you're going to sell, have it ready to sell. Have it look good. Have the paint at least touched up. Have the place neat, clean. Have it ready for sale. If you know some particular deficiency, get it fixed.
Totally agree.
You know, if you don't create issues for when you have the walkthrough to create a hesitation for the buyer, or the deal might fall out completely, and now you're starting all over again, and now you're 30 days into your 60-day escrow, or 60 plus a 30, and now you're sweating it. Now you're having to fire sale or drop your price.
Right.
So you definitely want to plan, and we always plan. If I knew I was going to sell, let's clean up the yard a little bit more. Let's kind of fix these things. Let's improve the curb appeal if it wasn't already there. I've always been one that, curb appeal is a big deal to me. So, but make sure that the product is ready for sale. You definitely want to do that.
Right.
Don't hesitate on that. And I found that always really having your product ready to sell is probably the best practice, because you're always going to get better tenants when you're looking to replace a tenant. You can get higher rents, and you'll have a higher sale and more offers. So there's really no reason to let your building go. And it always surprises me why some operators do that. Just do it right. I mean, I'm sure it's one of the best things that you can say when you're selling a property is brand new roof. Nobody wants to put a roof on.
Right.
But if you put it on, it's like, wow, that's $60,000, $80,000, $100,000 has been taken care of. It's or 40 depending on the size of the property. So have some of those big items done. You don't have to have everything. If the driveway's cracked, maybe you should think about replacing it. But definitely, we always made sure that the product was ready to sell when we did, and that helped. And in finding the pricing is important. Don't overprice it, but you don't have to give it away either.
Right.
Have a fair price, and it's okay that your buyer has got a decent deal too. It's okay.
Leave a little meat on the bone.
It's okay. It doesn't have to be a winner take all. It can be a win-win, and I found that that's worked because it's helped us when we're moving on to up to the next level.
Absolutely. I mean, we've done a number of 1031 exchanges together, and the buyers that we selected to purchase your properties, they performed.
Yeah.
And you had there was not a lot of surprises from those buyers going in your buildings, and you had that surety, high probability of them closing, and then you could focus on the up leg. And
what we have found is that we've had multiple transactions with the same buyer over and over again.
True.
Because of that. So we didn't have to spend the time, and we got a premium price because they knew, or they felt very confident that the property was in good condition.
They knew what they were buying.
When you're out there buying, you're going, I'm going to hedge my bets a little bit because there's probably something I didn't find in that walkthrough or that inspection. I'm going to get some surprise 60, 90 days down the road after I've had the property, and it certainly paid off in the long run. Again, it's having that vision for the long game, I think, is so valuable. Don't get caught up in that one transaction to have a win-win-win for yourself. Have a win for each of you.
Right.
It's okay, because it pays dividends. I mean, we have one that I think and the client, I think they've purchased 7 properties from us over the years. We've had 45 transactions, 45 purchases.
Wow.
And so they've bought, and out of the last, that 7 is probably out of the last 12 transactions.
Yeah, they did. They bought a lot.
So it definitely paid dividends. It did.
Totally agree.
And that again, and the reputation is important. Reputation as an operator, reputation as an investor, transactions with agents such as yourself or with the bank. It all goes together. There's no reason to be out there to just always focus winner take all.
True. When you were building your portfolio in Santa Ana, what about Santa Ana? There's a lot of sizable buildings, close center location to your house. You didn't have to drive an hour each way.
Yeah, of those, there were a lot of components. One of the components was at the time when we first started investing there, right around 2000, there were the city had been gentrifying, it was improving, and at the time, and the city council was even much more landlord friendly, shall I say. At the time, you could speak to the city, you could speak to the planning department. I mean, I had conversations with several of the city council people over the years, and and I looked at it as an opportunity. You had opportunities that left the properties in a dilapidated state, and frankly, I think sometimes they took advantage of the residency at times. And I looked at that as an opportunity because, I thought, well, if I could provide good housing at a reasonable value, at a reasonable price, in a better value, that I'm going to get, it's going to be better for me. I have a longer-term tenants that take care of the product, and I also have, if I do have a vacancy, they'd refer somebody. So referral was a big part of it back in the early days, especially before the mass advertising today in the rental market. And so, and I felt that the city was on an upswing at the time. But over the last 6-7 years, the politics have changed, have made it a little more challenging. And 4 years ago, I made the decision that we're going to move out of the city, and I'm glad we did. For me, that's what worked for me.
And then when you exchange out of Santa Ana, there's a lot of deals that come across your desk, right? You see a bunch of different properties. I remember in the beginning, back in 2009, 10, I was sending you properties I thought was a good, situation. I really did. I thought, hey, Jim, you should look at this. You should look at buying something. You would school me up as to tell me it's going to take a lot of work to get it to where to hit your pro forma. But, I think it would be really interesting to see kind of what are some of the characteristics of properties that you like, when you're acquiring. So when you're trading out of Santa Ana, going into Costa Mesa or Orange, like what are you looking for in properties? It is about the numbers, but it's also about the layout and
it is very much, and the configuration of the property is a big component. I've never been one to say price per door, because price per door only tells you one thing: the number of doors. It doesn't tell you the square footage. It doesn't tell you the condition of the property. It doesn't tell you how many bedrooms even it has. How much parking do you have? Where is it located in proximity on that street? What's next door? Is there a factory next door? Or is it or single family homes? There's a big difference, right? You've got the same exact property next to single family homes is going to perform much better than one next to a liquor store. Right? So, that's an extreme. But as we talked in the early days, you'd sell, I said, okay, let me look at, how much parking? Right? Parking was that was one of my factors, how much parking. I always had a rule of thumb, minimum 1 space per bedroom. So if you had 12 units and they were all 2 bedrooms, I want at least 24 parking spaces. Now, a lot of times you can get on that property and you can find parking space.
You're pretty good at that.
And we've done a lot of that. We've repaved areas, we've added parking spaces. So that is valuable, because my feeling was always, if they're working, I want tenants that work. So they're going to need a car, and they want to come. They don't want to have to come home and hunt down the street to find a parking space, because that's going to get old. And eventually they're going to move out of my place, and they're going to rent from somebody else. So that was always one of my first factors that I looked at on a property. Like I said, we talked about roofs, driveways, windows, construction. I can pretty much fix any, and those numbers you can kind of come and figure out. You get to, but things like parking was always a tough thing. Also, open space, and I even moved off that a little bit, and I eventually sold those properties. That were places you want an outdoor space, and not even if it's necessarily people want yards or they want balconies, but just community space, outdoor space, whether you can add a barbecue, whether it's just hanging out space, somebody to run their dog, Let's hope they pick up after it, right? And that's a whole nother story we can talk about. But pets are also a big part of it, and especially as we, moved up the ladder in quality, the pet becomes a very big part of that equation as well. So sort of things you want to do. Can they park their bikes? Is there a place to put those? I mean, there's lots of little factors that make it a home besides just a place to live. And so think about those things. And it's the same inside, right? It's like we started putting microwaves in. Other operators, oh, that's a waste of money. But it's so cheap and it adds so much value. If they're comparing against one or the other, it creates it communicates the message that you care about them, right? I'm not just trying to get you in here for the highest rate for the least amount of investment. Okay, yeah. If you're going to pay a little more, I'm going to give you something else too. We all do this, right? If we're going to buy something, if we're going to pay more, we sort of expect a little more. A little better quality, more features. It's not all that different in the housing space, and so all of those things definitely are important for maintaining a tranquil and satisfied resident base.
So I would imagine your renewals are pretty strong.
They are strong, yes.
And collections
are very good.
And then, so you've traded up 45 properties. So you've done a number of trades. So you've got that down. You know what to look for in a property that fits your criteria, and then really you've learned how to become a really good operator and optimize properties for cash flow. So talk us through how you do that. How do you optimize a property for strong cash flow?
Okay. One of the things that we do is when we go through, first of all, the simplest thing we talked about was parking. That's an additional revenue, whether that's higher rents or you're charging for additional parking spaces. Everybody wants additional parking space. So that's your low hanging fruit. Other areas of is try to improve the additional revenue streams. Look at your laundry. Is your laundry underpriced? By putting in contactless washers, people will pay more per wash and dry just by using an app. Having a gated community, adding a gate provides easily 5 to 10% additional rent. That people want to feel secure. They want to feel gated. I mean, you don't want to say it's a secured property, but you can always advertise that it's gated. Things like storage. Can you create storage rental? That's another big one, especially if you have residents in the trade. They always want to rent extra space for storage. Do you have backyards or do add revenue? That's an easy one. People will always pay more. If you have two units identical, one has a yard, the one doesn't, that yard is always going to get a higher number for sure.
What about rubs?
And then, exactly. So those are your top line items. Now you want to look at where your costs are. Right?
Okay.
So these are things. So even before we get to the rubs, you want to make sure your plumbing is in good condition. We go through and we inspect. We have one particular type of shower valve we use. They're notorious. The types that were in these properties built in the 60s are notorious for leaking, and a lot of money just goes right down the drain. And you want to make sure that your plumbing is tight without leaks, and that's a relatively easy inspection to do. Make a list. Are the toilets running? Are the showers dripping? Are the faucets in the kitchen dripping?
Right.
Those are easy things. Identify, quickly get those taken care of. And so you want to reduce those costs. Your lighting. We converted to LED lighting 12 years ago, back when hardly anyone had it, and it paid off. We do solar. We have solar on several properties. It pays off. You get a great tax benefit from it, and it drops your expenses and improves your bottom line. Rubs is that takes you to the rubs area. Now, rubs is one of the best things you can do as an operator to improve your performance of your property. And there's so many intangibles by having rubs. And you just have to get over that mindset of getting it set up. And that's where I see a lot of other operators call me and ask me about who we use and how did you do it. And, and I tell them, well, I don't know how to do it. And I said, don't worry about that. Just send a notice out that you're going to charge. Just because you're going to say you're going to charge, the resident is now responsible for water on January 1st doesn't mean you have to start billing them then, but at least it's in your contracts. And then you can work on getting that done. And a lot of these companies that do the billing service, they'll help you with that. If they're identifying what your common area deduction is. Common area deduction is the water that's used to maintain landscaping, or water that's in your used for your laundry room or to fill your pool or whatever. So those areas, I mean, some communities charge for all of that, on top, included all,
right,
or charge for all of that. And we feel it's better to just err on the conservative side. So even after you do that calculation, let's say you're looking at 18% of your bill is common area deduction. Well, it's better off to just use 20.
Right.
So the residents, are paying, or 25. So then you bill that back. And the other benefit about this is now the resident is much more engaged in the maintenance of the property. So if there's a leak, they're much more engaged to send in a request to repair a leak, because it resonates with them.
Mm-hmm.
Those drips actually cost them money. And that RUBS is based on occupancy for the most part. Gas, sometimes there are other ones that are based on square footage, but water in this instance, is based on occupancy. So residents will say, hey, I saw my neighbor, there's 2, and now I see there's 5 people living there, So they will also be very helpful in reporting. We have to investigate. And okay, so I noticed you got 2, but is there somebody move in? What's going on? And then you go through that. But it definitely engages them in the process, and they take more ownership of the condition of the property. Same with trash. You start adding trash, and you tell them, hey, you guys, every time they see on their bill that there was a bulky pickup because people kept throwing couches and not breaking down their boxes and things like that, they're going to be, if you communicate that to them, they'll usually be much more receptive to those things. And of course, all of these things improve the property at the same time, right? If you don't have leaks, you have less chance of mold. Okay? If your trash is always buttoned up, you're not going to have other people dumping there in the middle of the night. So all of these things kind of work together and to create a better community and a better run community. So, and a lot of people were asking even last year, as the CPI was going up, they're asking about RUBS, and I said, this is the time to do it. So if you're in a city right now, in California, and you can increase your rent 10%, maybe don't go 10%. Increase it 6.5%, 7%, and add RUBS. This way you're staying in compliance, but you're also investing in the property to keep your costs down and flat. So, because if you're continuing to pay more and more water, more trash, or whatever the utility is that's mastered, okay, human nature is they're going to use it as much as they want. There is no thought for them to conserve. We always would issue a 6-day notice or change in RUBS. I can guarantee you, every single time, that next water bill has gone down. Okay, because all of a sudden it's in their minds saying, oh, I need to watch, I want to keep my extra bills down. So, if you live in a home and you're paying your own electric meter, you're usually a lot more concerned about how much electricity you use because you're paying the bill. But if water is mastered and it's just baked into the rent, you kind of don't think about it too much, right? So RUBS is a great opportunity to not only keep your costs down and improve the revenue and the value of the property, but it also improves the condition of the property at the same time.
Gotcha. That's really good information. There's a lot of value there.
One of the things that we told investors is we're going to distribute 80% based on what the pro forma is. So
Do you let a couple months, when you acquire a new building, do you let a couple months kind of?
Yeah, the first 90 days, we don't do any draws. We say that, this is the time when we're spending money. We have a capital expense generally. Maybe rents need to come up, returning units.
Right.
There's a lot of expense in there. So those expenses are higher than normal during that period. And you really can't use those numbers in that first 90 to 120 days, depending on the complexity and the condition of the property. We've had other ones that we've, right out of the gate, have done very well because we've been able to really capture those expenses, or there haven't been any. But pretty much every property, any investor is going out there to acquire property, you should always expect there's going to be some capital investment initially. And then that goes into your calculating your return on investment. So what we did was, we communicated that we're going to distribute 80% every month. And we did monthly. I always felt monthly was important. Other ones would do quarterly, and I thought, well, that's not that exciting, So, people pay their bills per month. They like to get their income per month. So that was one of the differences that we did early on. I think a lot of people do that now, but it's more common. But that was an attractive thing. But having that stability is really important because it not only attracts that existing investor to come into the next project as well. So again, it's a little bit of sort of an under-promise, over-performing type of situation.
What's the goal for Jim, or the focus for the next few years? Now you've got your portfolio repositioned, all financed.
We did. We refinanced everything prior to these bumps. I mean, the last property that we had financed and acquired we had one in January of this year and one in May. Obviously, you were involved in. And right now we are looking to continue to do some improvements on the properties and take some of the things to the next level. One of the things that we're working on is EV charging. What else can we do as a revenue stream down the road? And we're looking to continue to maintain this portfolio with an eye out for something that might really hit the sweet spot for us. I mean, we are really, at this point, I'm elephant hunting only, and things that just would fit within the portfolio or would enhance it in one way or another. So
That's
for
exciting.
us,
That's a good place to be.
Yeah, I mean, it took us 25 years, but it's a good place to be, and I would say that to anybody. Again, is keeping that long view pays off.
Well, this has been a lot of value. I mean, just to get your perspective on a video and just 25 years of experience and sharing some of these nuggets within, this little video has been very valuable, especially for me because I've watched your career, kind of continue to keep growing. You've done a lot of transactions. You've leaned in when others were not necessarily in the market. If it was,
yes, we did zig when others were zagging. Definitely,
You did.
We did. We saw when, and I think that's where opportunities are going to come from right now too, in areas that maybe somebody doesn't think that, or
Right.
most people are saying, don't do this, be careful of this. That's really where there's opportunity.
well, you did really well in COVID.
Yes, we did. We did well in COVID.
You leaned in. You leaned in late 18, early 19 when rates were up higher than they were today. That you got a chase loan at almost 5% on Broadway.
Yeah.
And there was a lot less buyers, and you got to get.
And we got in, and that was a property that I was even questionable about, And
Did I talk you into that one?
You talked me into that one, and but it worked out. We did, we used our formula. We went through. This was a property that was pretty much ignored.
Yes, it was.
It is the way to say
Well, it was
it.
nicer on the inside than it was on the outside. So you went right in and painted the red.
We
Remember
did
in the
repaint
middle,
building,
and then
yes. Yeah, and we went through and finished. Well, the prior investor had done some improvements on some, and we ended up finishing the entire building with all the improvements.
Implemented rubs.
We implemented rubs. We did on there too.
created some parking.
We created a lot of parking there. Yes, we did. That was short on parking. That was a great example of parking. And
Did you get 2 spaces or 3?
we
You got multiple.
4 spaces.
4 spaces.
Yeah, I got 4 spaces out of there, and then 1 tandem. So I guess a total of 5 we created. So it was, but that's again, it's finding value where somebody else doesn't see it.
Right. Yeah, a lot of people are just fixed on what's the times gross, what's the price per unit, I'm in or I'm not, and you're looking at it on a deeper level.
Right. I mean, it's the same as if you're in Costa Mesa, the price per door is different. If you look at price per door, you would never invest in it.
Right. You get sticker shock.
You get, exactly. So it depends on, where you want to be. We're at a place now where the majority of these properties we're going to keep. Right. They're now legacy properties in a sense. They are not vehicles, which the other ones were. And it's a great place to be. Great place to be. So, I'm happy. I have to. I stuck to that mantra, and sometimes it was painful. And doing things to the property that maybe didn't make the best financial sense initially. Spending that extra money to buy a better water heater. Having landscape. A lot of, again, I get back to that landscaping and some of the things, fixing those things when you're in escrow, that's another thing. Fix things, a lot of times a seller will just ignore something when they're in escrow. Well, it's not going to be my problem in the next 45 days, right? Fix it and do it right. Send the buyer information, we replace this, it pays dividends. You'll get that buyer again if you're going to sell again, right?
True.
So it just makes your life better, and
well, it definitely differentiates you. I think a lot of people look up to you in the industry because you have been a leader. Like you said, people are calling you about rubs. People are calling you, how do you do this or that? It's just been. We'd love to see you keep it going. Get some elephants.
Yeah, you never know what's out there. We'll keep out there looking and find those things that are interesting, that have opportunity, and I like to help others too. Other investors involved or fellow landlords on. I think we as a group have to stick together, and there's some headwinds that we have to be conscious of, and I think that. I think we have to be more offensive than defensive on some of those
Agreed.
As we move along here.
It's been defense for the last couple of years with all this headwinds coming.
And it's time for this industry and also for us to promote ourselves. We landlords take a lot of heat in the press. They're just taking our money, they're going on vacation, they're buying, such and such or whatever. They don't keep in mind the hours that we do. We're always keeping track of what's going on. Every time there's a storm, winds, we're thinking about it. They may not be the tenants. We're also making sure that, again, the property taxes are paid, the roofs are down, the maintenance, the decks, all the walkways, the railings, things that they don't think about. If they owned their own place, they would have to take care of it themselves. So there's a lot of components that we really do help residents on, and I think that we as an organization need to get out there and promote ourselves and communicate what we do good, why it's good to have a landlord.
Yeah, good landlord. I mean, I remember, haven't you had a few tenants that have come back? They rented to other places and then they come back and it's like, oh my gosh.
I had one recently. It was a tenant, actually it was there when we bought it in Costa Mesa, the 37 units on Wilson. Mm-hmm. And she got a job in Maine. And she sent, 2 months ago, she sent her 30-day notice, and she had a wonderful letter to us. in just stating, she says, it's been a wonderful experience with Pointe Vista the entire time I lived here. I want to thank you, and those mean a lot to us. That goes because a lot of times, a lot of the communication with your residents is negative. And that's another reason why to go out there. And I know people don't want to. They don't want to get out on the property. Walk the properties, meet with the manager, talk to tenants if you can. I don't recommend getting into too much detail. If they want to talk about something, have them put it in writing or send a maintenance request in. But at least show that you care about the property. Look at the grounds. Is the pool in good shape if you have a pool? Is the railing in good shape? Maybe add a barbecue. Maybe re-landscape over here. These types of things. How are the fences? Maybe it's time to replace the windows. There is benefit to being out there. There is no replacement for having your feet out there on the ground on the property.
Well, Jim, we really appreciate it. Thanks so much for doing this. I know we've been talking about doing this for a while. So
yeah, it's my pleasure. It's my pleasure.
Absolutely.
Thanks for having me.
Yeah, we'll look forward to working with you again soon. And
absolutely.
Thanks again.
All right.
All right, everybody, that's it. Hope you appreciated everything that Jim went through and talked about. Thanks so much for watching, and we'll see you on the next one.